Welcome back to Talk Tickers, where we love to take a deep dive into the latest earnings calls.
Yeah.
And today we're going to be looking at Redfin's Q4 2024 earnings call.
Okay.
Yeah.
All right.
It was a pretty interesting one. Revenue's up, but profits took a bit of a hit.
Yeah.
And they're going with a pretty aggressive growth strategy, it seems like, in 2025.
Yeah. It's super interesting to see what they're doing.
Yeah, they're making some big bets. They got a huge new partnership.
Yeah.
And they're really laser focused on market share.
Yeah.
So
it should be interesting to see if this is kind of their comeback year or what's going to happen.
yeah, are they setting themselves up for success, or are they going to fall flat? So
Yeah.
let's dig into it.
Yeah. Their revenue hit $244 million, which is a 12% jump year over year.
Not bad.
Yeah, not bad at all.
No.
However, their adjusted EBITDA landed at a $3 million loss,
Okay.
which is a little bit short of their guidance. So that's something to maybe raise an eyebrow at.
Yeah, I mean, what was the reason for that mess?
So it seems like the reason for the miss was higher than anticipated agent pay because of their Redfin Next commission-based plan.
Okay, so this Redfin Next,
Yeah.
is that the...
This is the one that's shaking things up.
Okay.
So that's definitely something we need to dig into.
So it sounds like it's kind of like a double-edged sword, right? Like,
Yeah.
you're attracting new talent, but
There's causing some issues.
yeah. But before we dig into that,
Okay.
I'm curious, what were the overall results? Like top line revenue? How did they do?
So yeah, as I mentioned, revenue was really good.
Okay.
$244 million.
So they hit it out of the park there.
Yeah. 12% jump year over year.
Yeah.
But yeah, that EBITDA is lagging a little bit.
Yeah.
Which is interesting.
Okay, so let's dig into this Redfin Next
All right.
a little bit more. What is it exactly?
So Redfin Next is a program where agents are paid solely on commission.
Okay, so this is...
So like a traditional, it's more of like a traditional real estate model as opposed to their other plans.
Makes sense.
And because of that, they've seen a 25% surge in their lead agent count,
Wow.
which brings them to over 2,200 agents.
So they are getting people in the door.
Yeah, they're attracting a lot of new talent, which is good for them because they were seeing some attrition before this.
Okay, that makes sense. So they're bringing in all this new talent, but we see the EBITDA was a miss. So
Yeah.
something's not quite adding up there.
Yeah, so it seems like the early data is suggesting that the new hires are actually outperforming the veterans,
Oh, wow.
especially when it comes to attracting clients and winning offers. So that's really good for Redfin.
Yeah.
But there's a transition period, obviously, before those new agents start closing deals, and that's what impacted the Q4 sales.
Okay.
That makes sense because they're not going to close deals right away. They have to get up to speed,
Yeah.
ramp up.
So it sounds like Redfin's playing the long game here.
Yeah, they are.
They're making these changes now to set themselves up for success.
Exactly. And they're not afraid to spend money to grow either.
Yeah. What evidence do we see of that?
So they're increasing their 2025 advertising budget by 38%, which is a lot.
Wow.
And they're expanding their sales force as well.
Wow. So they're putting their money where their mouth is.
Yeah, they are.
And then on top of all that, they've got this big new partnership,
Yes, the Zillow partnership.
which is huge.
Yeah, that's a really big deal.
This one really caught my eye when I was reading through the earnings transcript.
Yeah, it was a bit of a surprise.
Yeah, because they were competitors for so long.
Exactly.
So to see them team up was like,
Yeah.
oh, what's going on here?
But it seems like it could be really beneficial for both of them.
Yeah.
So what they're doing is they partnered with Zillow for rentals.
Okay.
And that basically doubles the number of high quality apartment listings on Redfin's platform.
Wow.
Yeah, so that should make them a much stronger competitor in the rental space.
So that's a good way to kind of get more market share.
Exactly. And plus, Zillow paid Redfin $100 million up front.
Oh, wow. So that's a nice little...
Yeah, it's a nice chunk of change to kind of help fund their growth initiatives.
Yeah, so that's going to help with that big advertising budget increase.
Exactly.
And all the other things they're doing. So
Yeah, they're in a really good position right now financially.
So it sounds like Redfin is really thinking about the future here.
Yeah, they are.
They're not just focused on short-term profits.
Long-term vision.
Yeah, they're really trying to build something sustainable.
Yeah, and they're not just relying on home sales to make money either.
Oh, yeah. What else are they doing?
So they want to boost their mortgage and title attach rates.
Okay.
They want to further monetize their rental audience, which we talked about a little bit.
Yeah.
And they want to expand their digital advertising revenue.
So they're really trying to become like a one-stop shop for...
Yeah, exactly. Like if you need anything real estate, you go to Redfin.
Gotcha, gotcha.
So it's a smart strategy because it diversifies their income streams.
Yeah.
Which is always a good thing.
Especially in such a volatile market like real estate.
Exactly. And they're not expecting a huge rebound in 2025 in the housing market.
Yeah.
They think that the worst of the downturn is probably behind us.
Okay.
But they are seeing signs of a gradual recovery, like increasing inventory and a little bit of an easing in those year-over-year comparisons.
So are they being overly optimistic, or do you think this is like a...
I think they're being cautiously optimistic, which is probably the best approach in this kind of market.
Yeah, so they're not, putting all their eggs in one basket,
Right.
but they're still hopeful.
Exactly.
So we've covered a lot of ground here, just in this initial overview of Redfin's earnings call. What stands out to you the most so far? Anything that's really piquing your interest?
I think the most interesting thing to me is this commitment to Redfin Next.
Yeah.
Like, even though it's causing this short-term hit to their profits, it's a really big change to completely revamp their agent compensation model.
Yeah.
So I want to dig into that a little bit more.
Yeah, me too. I think that's where we should go next.
Okay.
Because that's really the crux of their strategy, it seems like, as that's what's going to determine their success or failure in the long run.
Yeah, I think so.
So let's dive into Redfin Next in a bit more detail.
Okay. Sounds okay.
So it seems like Redfin's betting that a commission-based model will attract those high-performing, ambitious agents.
Exactly. They want those people who are driven by the potential to make a lot of money.
Yeah.
And they think that that's the kind of agent who's going to be successful in this market.
Yeah, and so it's not just about attracting new people, though, right? It's about aligning incentives with Redfin's overall goals.
Exactly. So by tying that compensation directly to sales performance, you're encouraging the agents to really prioritize client acquisition, offer competitiveness, and ultimately closing deals. Yeah.
So it's all about creating this more efficient and results-oriented sales force.
And I imagine that probably leads to a more consistent experience for customers too, right?
Yeah, exactly. Because you have agents who are all incentivized in the same way.
Yeah.
And they're all working towards the same goal.
Okay. So it sounds like a really good idea in theory.
Yeah.
But there's got to be some downsides, right? Because we saw that agent attrition.
Right. There are always risks associated with big changes like this.
Yeah.
So, some veteran agents might not like this change.
Yeah.
They might have been comfortable with the old way of doing things.
Like a more stable income.
Exactly. A more predictable income structure.
Yeah.
So Redfin has to be really careful to manage this transition.
Yeah.
To make sure that they keep those high performers while also bringing in all these new people and training them effectively.
So it's like a delicate balancing act.
It really is. Yeah.
They got to keep everybody happy.
Yeah.
They got to make sure everybody's performing.
And ultimately, they got to make sure that all these agents that they're bringing in are actually leading to more sales.
Yeah. If it doesn't translate into increased sales volume, then it's all for nothing.
Right.
Because that higher agent pay is just going to eat into their profits.
Yeah. So this Redfin Next, it's really make or break for them.
It is. It's a big gamble.
Yeah.
But if it pays off, it could be huge.
Yeah. I mean, they could really dominate the market if they pull this off.
Yeah, they could.
All right. So let's move on to their revenue diversification strategy.
Okay.
Because it seems like they're not just content with relying on those home sale commissions anymore.
Right. They're looking at everything.
Yeah.
They're looking at mortgage and title attach rates.
Okay.
They want to squeeze every dollar they can out of each transaction.
Yeah. So why are they doing that?
Well, I mean, it's a smart move because by offering those additional services to their clients, they can capture a bigger piece of the pie.
Yeah.
And they can also create a smoother experience for the home buyers.
Okay. So they're trying to be like a one-stop shop.
Exactly.
For all your real estate needs.
Yeah, that's the goal.
But I imagine that's got to be pretty tough, right? Because there's already so many companies.
It is a very competitive market.
Yeah.
There are a lot of big players in the mortgage and title industries.
So how are they going to stand out?
Well, their big advantage is their technology.
Okay.
They're using their platform to offer a more efficient and transparent process.
Okay.
They have all these digital tools and online resources that can really simplify things for the clients.
Oh, they're making it easier for people to...
Exactly. It's supposed to be less of a headache than going through the traditional route.
Okay, so they're banking on convenience and technology
Exactly.
to kind of differentiate themselves.
Yeah.
Okay. And what about that digital advertising revenue they were talking about, expanding that too?
Yeah, so that's part of their overall strategy to become this hub for everything real estate. So they want to attract users to their platform with all these different offerings, from listings to rentals to mortgage services.
Yeah.
And then once they have all those people on their platform, they can show them ads and make money that way.
Okay, so they're building an audience.
Exactly.
And monetize through advertising.
Yeah, it's a pretty common playbook in the tech world.
Yeah, that makes sense.
But it seems to be working for them.
Okay, and then what about the rental market? Because they talked a lot about that.
Right.
The Zillow partnership is a big deal.
Yeah, that gives them access to a ton of listings.
Yeah.
But how are they going to make money from that beyond that upfront payment?
Yeah, that's what I was wondering. What's the long-term plan there?
Well, they have a few ideas.
Okay.
One option is targeted advertising to that rental audience.
Okay, so they're going to show them ads for moving companies or furniture stores.
Yeah, exactly. Stuff like that.
Gotcha.
Another option is to connect renters with property managers and landlords for a fee.
Okay, so they're going to be like the middleman.
Exactly.
Right.
And they could also develop some premium rental services for landlords.
Okay.
Like tenant screening or lease management tools.
So they're really trying to build out a whole ecosystem around rentals.
Yeah, they want to be the go-to platform for everything rental related.
Okay, so it sounds like they're really aiming to become a major player in the rental market.
Yeah, they're not just going to be a passive listing platform.
Yeah, they're really trying to be innovative and shake things up.
Yeah, they are. They're taking some risks.
And that's what makes this so interesting, right? Because they could really succeed.
Yeah, or they could fail spectacularly.
It's high risk, high reward.
Exactly.
But it's exciting to watch.
It is.
So overall, it seems like Redfin is at this really pivotal point.
Yeah, they're at a crossroads.
They're making these big bets.
Yeah.
And it's going to be really interesting to see how it all plays out.
Yeah, I'm really curious to see what happens in the next year.
Me too. All right, so now let's shift gears a bit and move into a more speculative segment.
Okay.
And just to be clear, this is purely for entertainment purposes.
Yes, this is not financial advice.
Do your own research, talk to a financial advisor.
Right.
We're just having some fun here.
Exactly.
Exploring some outrageous but plausible trade ideas.
Right, based on what we've learned.
Exactly.
About this company.
Yeah. So with that disclaimer out of the way,
okay,
let's get a little crazy.
All right.
So what if we took a contrarian approach here?
Okay.
What if instead of focusing on all this potential for growth, we considered the possibility that their big moves could backfire?
Oh, okay. So you're thinking about a short position.
Yeah, I'm thinking, what if we short Redfin?
Okay.
It's high risk, high reward.
Very high risk.
But hear me out.
Okay, I'm listening.
What if this whole Redfin Next thing just blows up in their face?
Okay.
What if agent attrition keeps going up?
Yeah.
And they just can't attract the talent they need?
That would definitely hurt their sales.
Yeah. And what if there are other plans to diversify revenue? Just fall flat?
Yeah.
What if they can't compete in those mortgage and title markets?
Right.
And they just don't make any money from advertising?
Yeah.
And then what about that Zillow partnership? What if that's just a total flop?
Right. What if they can't integrate those listings properly?
Yeah, or they can't figure out how to monetize that rental audience.
Exactly.
So basically you're painting this picture where Redfin's just
implode.
Yeah, and their stock price plummets.
Yeah, and if that happens, then shorting them would be a genius move.
Exactly.
But of course, there's the other side of the coin.
Right.
What if they execute perfectly?
And if everything goes right?
What if Redfin Next is a huge success and they dominate the market?
And their revenue just skyrockets.
Yeah, then shorting them would be a disaster.
Yeah.
So it's a gamble.
It's a big gamble.
But that's what makes it fun.
Yeah.
It's all about assessing those risks and rewards.
Exactly. And making an informed decision.
Right.
But again, this is just one possible scenario.
Yeah. There are tons of different ways to look at this.
There's so many different ways to trade this.
Yeah. Do your own research.
Talk to your financial advisor.
Right.
Don't just listen to us.
Exactly.
All right. So now let's actually dive into the numbers.
Okay.
And see what Redfin's financials are really telling us.
Sounds good.
Okay, so let's start by looking at their core real estate services segment.
Yeah.
You know, the one that brings in most of their revenue.
Right.
They saw a 12% increase year over year.
Yeah.
Hitting $244 million.
Yeah.
Which sounds pretty good.
It does sound good on the surface.
But what about their profitability in that segment?
So that's where it gets a little bit tricky.
Right.
Because even though their revenue went up, their gross margin actually went down.
Oh, interesting.
Yeah, just a little bit, but still it's a little bit of a red flag.
Okay. And why is that?
So it looks like it's mostly because of higher personnel costs.
Okay.
Specifically, those big transaction bonuses they're paying out with Redfin Next.
Yeah, so Redfin Next is coming back to bite them a little bit.
Yeah, in the short term at least.
Okay, but the real question is, will those margins rebound as those Redfin Next agents start closing more deals?
Right, and as they get more efficient.
Yeah.
I mean, that's what Redfin is banking on.
Yeah, they're hoping that the long-term benefits outweigh these short-term costs.
Exactly, and we'll have to see if that actually happens.
Only time will tell.
Yeah.
Speaking of Redfin.
Yeah.
Next, that 25% jump in their lead agent count is pretty impressive.
It is. It shows that they are attracting new talent.
Yeah, but can they convert that talent into actual results?
Right. That's the next hurdle.
Yeah.
They've spent all this money to get these new agents in the door.
Yeah.
Now they need to make sure that those agents are properly trained and motivated.
And actually closing deals.
Yeah, and then they can actually thrive in this market.
So it's a lot of pressure on those new hires.
It is.
But let's not forget about their other growth initiatives.
Right.
Like that push into the rental market with the Zillow partnership.
Yeah, that's huge.
Doubling the number of apartment listings on their platform is a big deal.
Absolutely. And that $100 million they got up front from Zillow definitely helps.
Yeah, it gives them some breathing room.
Exactly.
To kind of experiment and figure things out.
Yeah, it's a smart move to get into rentals, especially with how tough it is to buy a home these days.
Yeah, for sure.
But the key is going to be monetizing those rental listings.
How are they going to turn those listings into profit?
Right, because just having a bunch of listings doesn't mean anything if you can't make money from them.
Exactly. So what's the plan there?
Well, they're looking at a few different things.
Okay.
One option is targeted advertising.
Okay.
Showing ads to people who are looking for rentals.
Makes sense.
Another option is connecting renters with property managers and landlords for a fee.
Oh, okay. So like a matchmaking service.
Exactly.
Interesting.
And they could even create some premium services for landlords.
Okay. Like what?
Things like tenant screening or lease management tools.
So they're really trying to create a whole suite of services around rentals.
Yeah, they want to be the one-stop shop for everything rental related.
It's ambitious.
It is, but it could be really successful.
Yeah, it seems like they're not afraid to try new things.
No, they're definitely not risk averse.
Which is both exciting and a little bit scary.
Yeah, it's a high risk, high reward situation.
For sure.
But it's definitely interesting to watch.
Yeah. So to wrap things up, it seems like Redfin is a company in transition.
Definitely.
They're making some bold moves.
Yeah, big bets on their future.
And the outcome is still very uncertain.
We'll have to wait and see how it all plays out.
But one thing's for sure.
What's that?
They're definitely shaking things up in the real estate world.
Yeah, they're not afraid to disrupt the status quo.
So that's it for our deep dive into Redfin's Q4 2024 earnings call.
Thanks for joining us.
And as always, we encourage you to do your own research.
Yeah, this is not financial advice.
Consult with a financial professional before making any investment decisions. This podcast is for entertainment and educational purposes only.
Right.
We'll be back next week to break down another company's earnings.
Until then, happy investing.
See you later.